Chairman and CEO Jeremy Frommer joining us now. He is a Wall Street veteran who moved to the other side of the trade. He built, created, which is a data company and a media company, and he created the ticker symbol CRTD, which went to the NASDAQ in 2020. And it wasn't long before he realized that greed, manipulation, and naked shorting or counterfeit shares were destroying companies, and that included his. So, Jeremy, it's good to see you again. You decided to speak out, which not a lot of CEOs are willing to take that move and take on Wall Street. But being a veteran, you had some capital there.
Yeah, I mean, I think that I'm not the first to speak out. In fact, if we really want to be accurate about it, the first to speak out was Musk. But when he spoke out on Twitter and went through all that with the government, I think that the issue there was that the thing he was speaking out about, because there are multiple things that CEOs can discuss, probably was one that touched the boundary, pretty intensely, and therefore created all of that hoopla around it. I think that the notion of fear of speaking out publicly, irrespective of whether your opinion is popular amongst regulators, is not a good reason to stay quiet. In fact, we have a fiduciary responsibility to identify and speak out about anything that damages our shareholders' value. And worse, by the way, one other notion about speaking out. I view the speaking out thing as a very existential concept, meaning I don't see many laws about what I am and not allowed to say as a leader or a CEO of a company. What I see from regulators is a lot of ambiguity. And worse, what I also see is years and years of lack of response by the regulators. And so the idea of speaking out is not just because I decided, hey, I'd like to talk and get everybody to know me. And I had no choice. I didn't do it with choice. I did it because of what the infrastructure and system that the regulators are responsible for has perpetrated. And so the notion of not speaking out against the very thing that they themselves have perpetuated because you have a fear of what they think, that just didn't work for me.
Some of my former colleagues and I have a saying, once you see it, you can't unsee it. And I think that's what you're talking about. So you went to StockTwits, you went to Twitter. This was in spring of last year. You put a target on your back when you speak up. There's no doubt about that. You got a call in September of 2022 that your stock was being delisted. Talk about the emotions that go with that. And then you decided, I'm going to fight back harder.
Yeah, I mean, we had a feeling, it's not like a light switch where they just say you're delisted. It was months of discussions with the NASDAQ. And it was gut-wrenching. And as I wrote about in an article on CEO Block, it was a moment, again, that you can't really describe until you go through it, and you don't really have the option of whether you are or aren't going through it. And so in that moment, you have no choice but to figure out how to survive or collapse. And during that time period, I met at my office with probably a half a dozen CEOs, of which half of them literally closed up shop, left, fired all their employees, and went out of business. And the other three are still struggling, as are we to a great extent, right, against these type of headwinds. And so, the period of recovery these last sort of 5 or 6 months since we got an inkling that it was happening have been one where I've been able to refine my voice, meaning I already knew, as you said, that a target was on my back as early as the spring. And once I realized it, I also decided again that I wouldn't hold back any further with what I had to say. Also, against lawyers' wishes, against advisors' wishes, against everyone, I spoke out. and attracted a lot of negativity, which is often what will happen in the lesser levels of chat rooms within the internet, and probably use that experience on sites like StockTwits to experiment with what would be the reaction. It wasn't until after we were delisted that I decided to try to take the voice to a larger platform like Twitter.
And when you did, you found a bigger following, I guess, among retail investors. There's another ham short killer on Twitter, another Wall Street veteran. He's been pounding the pavement about naked shorts or counterfeits for decades now. And to have someone like you come out here and kind of rally the troops, right? You've created CEO Block, which launched this past week. And there's been a really good reaction to that. You have it so well set up on there. You kind of give everybody the history and then the now.
Yeah, yes, we tried to make it at first educational, but very mission oriented. The idea was born out of a discussion my partners and I were having right after we were delisted, which again was kind of like, Jeremy, please take the gloves off and just go for it, and take it as far as I could, which I haven't even scratched the surface of, for those who want to understand better where I'm heading. But CEO Block was meant for me to be able to find a voice for other kindred spirits, other CEOs. Again, I think that my financial industry background for 23 years prior to deciding to, as you said, sort of take the other side of the trade, which was be a leader of a publicly traded entity as opposed to a person who profited by the trading of public entities, right? I wanted to know what the other individual felt like. And when it came down to sort of how we would unite these CEOs, we began to ideate on the last time there were these kind of movements against Wall Street, before the financial collapse, after the financial collapse, after Bernie Madoff was discovered, after Occupy Wall Street. There were some great documentaries made about it, the Wall Street Conspiracy amongst them. And you began to understand what was happening through what was a limited prism back then. Today, as you mentioned, Ham Short Killer and others like him, I could name many of them. They long before I ever arrived on the scene, we're experimenting again with this sort of community building that we now have the luxury of doing as retail investors, which really was only a luxury enjoyed by the hedge fund elites for decades. It wasn't until 5 years ago, and we had sophisticated trading platforms that were available to the retail investor. It wasn't until years ago that we had started to have communities and Discord rooms and chat rooms. And then you saw what that sort of uncontrolled experimentation did with AMC and GameStop, right? Now you fast forward and you're in a world now where the organization has become so refined, the community so sophisticated, that it was really right for one final component that my group of CEOs and I were able to bring to the table, which was like a home base that will be funded by the membership community with missions and very sophisticated accounting around what those missions are and transparency around where their membership fees go, because this is not something that we're looking to profit from. We're looking to literally use all of that capital to continue the fight. And, the fight costs money. Each of us as CEOs right now are actually, in a sense, wasting some money, some of our shareholders' value, because we're approaching this with 10 different lawsuits as opposed to one. We're approaching it often with 10 different voices that give the regulators a chance to say, oh, it's too confusing. Each of them says a different thing, as opposed to one. And so I realize as a CEO, when you're in this seat, you understand the concept of organization at a different level. And that is when I started to not just see that I was getting sort of a little more popular on Twitter, I guess, but people were reaching out to me and I was being responsive. And so CEO Block turned into more than just an idea of a group of CEOs. It turned into all of us being a part of the community, all of us getting educated, all of us wearing our colors, all of us keeping each other up in chat rooms, all of us being able to create interviews such as this and roundtables in real time for the community. And most importantly, raise the awareness. If we hit our goal, one of the things I don't think people know yet, we're going to start a campaign, and Created is itself going to again contribute to this campaign directly as a company. But again, if all the companies around us all contribute, we will get to our goals faster. And the idea is we'd like to see national advertisements taken out in the Washington Post, the New York Times, the Wall Street Journal, and make sure that the awareness rises to the level of things such as Madoff or FTX. I mean, there's billions and billions of dollars being lost here. And it's not being lost by hedge funds. It's being lost by American hardworking individuals. And so CEO Block was meant to be that home base for all things related to this abusive practice.
Yeah, and you've brought together, it's not just for CEOs, it's for seasoned investors, it's for people just dipping their toes in for the first time. It really shows you there is power in numbers and a unified voice, which is what you were just talking about. With that, I want to talk, you mentioned AMC, and until now, I think, or until people started hearing you speak and other CEOs, they've really thought that CEOs couldn't speak out legally. You touched on this a little bit before, but there are allegedly 1 billion naked shorts, counterfeit shares in the spinoff of AMC 8. But yet Adam Aron hasn't really addressed this. He's got a huge retail following, and people really believed he wasn't able to speak out, but then you did. So, and you have been. So you can. Just talk about the parameters of that and your thoughts.
So I think Adam is in a tough spot. If there's anybody who has a target on his back and is being watched, it probably is him. Meaning at my market cap, I'm not being watched as much. Not that I'm concerned with what I say, but Adam probably is beholden a great deal more towards the opinions of others simply because of the size and scope of what's going on there. That 1 billion shares, again, if you're in his seat, I sure hope he has an alternative plan to speaking out, meaning since he is silent, I'm going to give him the benefit of the doubt that he is pursuing all sorts of internal investigations around this, and that his perception might be that he has a very high degree of probability of remuneration, and he may be playing it very close to the vest for that reason. That said, I do think the concept of reverse splitting, for instance, is one of the most misunderstood concepts for retail investors. I'm not even going to get into the notion of why mathematically it's irrelevant to split or not, because that's fact. But what is also fact is that the retail investor invests both by shares and dollar size. And so that's why Robinhood and Interactive Brokers and all of them changed their SaaS platforms to be able to create trades either by dollars or shares, something that was never even an idea in anybody's mind when I was designing the front ends for trading systems 15, 20 years ago. So the notion that a stock reverse splits and it should move the stock one way or another, to me, has some merit because of that psychological component, even though mathematically it shouldn't. And as we know, psychology plays a very important role in the stock market. When it comes to reverse splitting, I have basically one theory on it, which is you should never reverse split unless you ostensibly are under the gun with no choice. And I call that a reactive split. So if, for instance, when we attempt to uplist to the New York Stock Exchange, and if our, again, it's an arbitrary notional number, and we could argue about the validity of it, but if my stock had to be above $2 for that uplist to take place, and my stock was trading at $1.75 or $1.50 the night before, and I cannot, under any circumstance, get up and the deal done. And a lot of that has to do with whether or not you're with good investors or you're with people who are threatening you. And we can get into the whole community of financing another time, because getting a stock uplisted is real tough. And when you do it, if then you must split, you're actually doing it in the interest of shareholders. And they may not see it that way because of the psychological issue I discussed, but you are doing it for their sake. And you are doing it to create long-term value. And I can't speak to the short-term money players, but I can speak to the long-term value and statistically say that that is correct, that statistically it is the correct thing to do. Now, then there is the other side, which is called proactive reverse splitting. Now, proactive reverse split has much more to do with optics. If you want to be picked up by the analyst community, for instance, it's not great when your stock's trading at $4 and they're like saying, oh, it's going to be up 20%, and 20% means that it's going to be up $1, I mean, or 80 cents in the $4 cents, like that's just not that exciting. And it doesn't matter that your market cap may be $1.5 billion. And so
doesn't it also give the naked shorts a bigger playground when you do a reverse split? Like, I understand if you have to do it, what you just explained, but it basically gives them a bigger number to short all the way down again, and then they just start again.
For now, yes. But that is because, unlike the hedge fund community, the retail community is not yet fully educated. And I'm very about that on our platform. Very much about the idea of educating. And that's why I'm actually even going to the Occupy SEC 2023 rally next week on Thursday, because I think people have to educate other people. And I have to be educated as to their thoughts and their feelings on what's going on. But from a reverse split standpoint, at this current moment, because retail and others will react to that hot topic button, it actually gives an advantage to the naked short sellers, because they know that the notional value and the movement of something down $1, even though it may be the same 5% movement that 5 cents would be on $1 stock, is enough to create further fear because of the psychological perspective on the notional. And again, as I said in my shareholder presentation recently, algos work based on smelling blood in the water, meaning an algo doesn't just decide, I don't like created. An algo doesn't just decide, I want to buy GNS. They smell one way or another, blood or otherwise, and are immediately going to move towards that. So if it senses that retail reacts negatively to a reverse split that they shouldn't have, it will utilize that opportunity to compound its previous behavior.
What would you say to the investors who, after your annual meeting, because there was the right to use a reverse split if you needed it, authorized, and then people reacted, as you said, the psychological warfare was going on, what would you say to them, just to
I would
put it to
say
bed?
every CEO should be transparent. Every CEO should be educating their shareholder base, and that I'm trying to explain to my shareholder base that I am authentically a long-term shareholder in my company. There is no doubt of that. I personally invested many millions into this company, most of my fortune, quite frankly. And that's one of the reasons that I am fighting as hard. I'm fighting for my employees, my family, the shareholders who have come along with us. And I've demonstrated time and time again that I am here for the long run. And so anybody who thinks as of that reverse, that I'm doing it tomorrow, the next day, whatever the rumor du jour is, I'm telling you, I'm not. The only time that I would do a reverse split is because I need to get up to a national exchange. I would not do it to satisfy the analysts that I was referring to earlier, or the institutions. And I certainly would never play into the naked short sellers' hands. And so since I believe that my shareholders know me to be a person of transparency and authenticity, I would ask them to believe that, and hopefully they understand. And when and if we get closer to that moment, I will openly discuss it then with them as well.
Ham has said there's more than 100 million counterfeit shares, naked shorts, in CRTD. What do you think the number is? Do you think that's accurate? And how do you get the data when people don't want you to have that data? And do you know who the naked short is in your company?
All right, so let's assess all three of those.
Yeah.
The first answer is yes. I probably believe there's more than that naked short. Meaning, it's very obvious that when a stock only has 15, 20 million shares, let alone maybe 12 in its public float a year ago, and the stock trades 90 million shares in a day, you're seeing what I've described in some of my previous interviews as ostensibly demand overweighing supply. And the machines don't have any emotion about that. They don't have any perspective of risk control relative to that, because that overwhelming moment is a rare event. And so it's very clear that in those moments, your retail shareholder base grows exponentially. The machines continue to fill the orders without care. And you can very easily look at how many millions of shares have traded, statistically look at a sampling of any number of industry stocks in the same situation. You can compare the two today technologically with real AI type of data analytics, and it can tell you what the mean, what one standard deviation of behavior off of that, but what should have been normal for your stock based on all the other stocks and how they behave. And it's without question absolutely true that there are now already dozens of these anomalies, and it is very clear from the data that they must be at those kind of multiples. Otherwise, the events that occurred could not have occurred. So I hope I explained my perception of how many shares. It wouldn't surprise me if it was 150. Like, it's just not at all. That's not to say it might not be 75, but the notion of 100 for sure. You had this moment in time where meme stocks were supply was being overwhelmed by demand. It happened in other industries too, like the crypto space. NFT space, there were these moments where demand overwhelmed supply. And as far as how it happens, I think the easiest way to explain it is that up until about a decade ago or so, many of the functionalities around both creating a bona fide borrow for a trade, as well as what the regulatory process of reviewing institutions' central books and what their short positions was a relatively well-structured concept, meaning there were always, over the last 30, 40 years, there were always exogenous, sometimes many exogenous events from Madoff and others, from all sorts of spoofing tactics. Yes, there was always naked shorting, Dole Foods, and all sorts of other examples of that. Put the whole argument to rest. I mean, it's fact. And so, and I say that because I didn't believe it a year and a half ago. Like it's very, you know, at my stage, to have had my eyes opened like this was quite a thing. And you have to really start to look deep into how things changed in this last decade to see that technology has disrupted not just every industry, it disrupted Wall Street. It's just that Wall Street is too arrogant to accept that it has been disrupted. Ironically, I'll tell you a funny story. I was always on the tech side. I started my career in '90 at Kidder Peabody. By the time '94 rolled around then, '95, I was at a bigger institution. I was at Royal Bank of Canada. And Royal Bank of Canada was a very progressive technology group here in its capital markets group in North America. You know, most of the United States is where I was domiciled. And still, that same group took years to approve the internet on the trading floor, because they were worried that the traders would not use it, which they do now, to gather and learn and create knowledge and communicate. The notion of regulators is to literally think the worst of everything for banks, and for banks to be afraid of it. And it took 3 years for many institutions, while already smaller institutions were already exchanging ideas and had already embedded themselves in the internet, for the Wall Street firms to stop believing that everybody was going to gamble and look at porn on the trading floors, and started to realize that it might actually be helpful to their businesses. And so it's that very same group, very same mentality still today, and it never caught up with technology. And eventually, when you started going to fractional share trading and subscription-based trading, no commissions, the entire business model of the last 200 years, which was a transactionally based concept at Wall Street, turned into balance sheet arbitrage, lending capital, et cetera, proprietary trading, and other avenues to replace the lost revenues from transactions and commissions. The catch was that, unfortunately, the data that was now going up to the central book from the multiple institutions throughout the institution, multiple trading desks throughout the institution, nobody on those individual desks was being held accountable anymore to stock loan, because there was no way to create technology that could get to fractional share trading while at the same time maintain a robust back office that could confirm that 10 cents sold at 0.715 was actually borrowed. And so they stopped. And what they believed was all of these desks would net out at the central book level, and they would show that to the regulators. And in the end, the regulators only come back and say, okay, let me see a sampling of these stocks. If the sampling proves out to be okay, they move on. If they smell something, they move deeper into the book. But on the whole, the system got broken in the last 10 years. This is not, there's no one person responsible for this. And this movement has to understand that so that it does not go after or villainize people that should not be villainized. What was your third question in that series?
You know who your naked short is, one that's trying to destroy your company. And if you do, can you say?
I have suspicions as to all sorts of players in the marketplace. There's ones that I have seen or heard of. There are those that I've met in my life where I presume 1000% they're out there naked shorting it. The thing is, though, I want to again help people better understand what I think happens. What I think happens is these people act as catalysts. They are not the thing that creates the spiral. There's no one individual that sold 80 million shares of CRTD when we were trading up at $7, $8. That's just not how it works. What there is enough strength now at the catalyst stage, meaning enough people have begun to understand that if they push something a certain way, they can create pain, and pain begets pain. What we're doing is the opposite. I hope myself and others can strengthen the retail investors. Strength begets strength. Education creates knowledge, does away with fear, and allows the retail investor to take proper risk. And so while I don't think it's any one player quite that way, there is an entire subspace of toxic lending, market-making practices by bad players, and all of them must be removed so that there is no more spark that says, let's get this thing going and hurt this company.
When you talk about toxic lending or aggressive lending, you have companies that will know a company is in that needs money. They'll lend the money to that company. Then the same lender will short the stock, demand the repayment, and essentially put that company out of business because they can't repay it. And there's no taxes. It's a rinse and repeat. And it has happened for decades.
It sure has. Look, I have no rinse and repeat paper currently. Over the course of the last almost 6-7 years as leader of a public company, we've had occasion to take pieces of that kind of paper. And I've seen firsthand up close the results of that. The problem is that there is no legitimate capital market space around the microcap and small cap companies. And the biggest problem, and I'm not saying it's all the broker dealers at all, Kristen. I'm not implying that it's that systemic. Yeah. But what I'm saying is there are certain broker dealers that engage in what I believe is, forget whether or not they're naked shorting. I think there's a bigger problem at the beginning of the capital markets process, which is a broker dealer that does a deal, a $10 million transaction for a microcap stock space, right? Microcap stock in this space. Their client is not really the company. which is how traditionally the capital markets were built. Bankers had corporate relationships. Their bread and butter is their relationship with the hedge funds. The hedge funds give them all the business. And so, unfortunately, the real client of today's microcap space are the actual hedge funds. And until that stops, until you have either hedge funds, which I hope to one day be a part of, meaning that I see in my future moving back to my financial roots again and probably managing money to get in between what I think are these bad lenders and those companies and help salvage those situations. I think that until we have really a fundamental change in the philosophy of the microcap capital market space, that problem is pervasive. And what they're doing is setting up structures that essentially come within a fraction of being illegal or usury. And fortunately for them, we live in a world in desperate need of torts reform. And the legal system is itself very convoluted around this stuff and is as equally as fault. The legal system is equally as at fault as are the broker-dealers that masquerade as capital markets groups that are really just fronts for hedge funds.
Yeah, I want to get to solutions in a minute, but first, you're talking about these microcaps. These OTC companies are particularly vulnerable. Institutions can't buy them, right, until what, $5, and brokers can't recommend them. So they sort of fly under the radar, but they're really vulnerable to anyone who wants to create counterfeits in their shares.
I think you've touched upon one of the saddest aspects of all of this, which is if people understand the history of the OTC, it truly was with good cause. It was meant to give entrepreneurs such as myself the same type of opportunity to raise funds and build a business as big companies do in this country. And unfortunately, again, as often happens in this country, the minute there is a shred of arbitrage to exploit, greed steps in. Mm-hmm. And two problems occurred with that idea of the OTC space being entrepreneurial. First, for the OTC space to be functional, it required, there's nearly 20,000 stocks on the OTC. Now it needs that because it needs the fees. It needs the money to run that business. NASDAQ, different, 3,000 stocks, different fees, different structures. And so the minute you get into 20,000 entrepreneurs, you're creating a negatively impacted selection, right? All of a sudden, it's much harder to find the 500 of the 20,000 than it is to find the 200 of the 3,000. And so the first thing that happens is the OTC market then becomes a place for people to exploit the opportunity, unlike myself and many of the other CEOs that I'm associated with that are trying to build real companies. And so we're very concerned over the fundamental breakdown in the OTC markets, and I think that has to be addressed at a very high level. Tell me was that the question?
No, that was good. No, that explains it, because there's so many good companies that there are companies that are just not even fundamental plays.
And then, quite frankly, on the regulator side, there just aren't enough regulators, and they have to go after. They have to go after, and that's why I've started moving us towards the way I've been doing it as a company and as a movement, because united, there's a better way to solve this. There is a solution. And right now we're caught in a trap where we have negative selection in the pool that we're in. Mm-hmm. And there's not enough people at the agencies to help and respond to us, right? And so there's a problem there. We can't get through the wall.
There was a truck that's been out in front of the SEC several times. It's been in front of CNBC, Fox Business, some of the lenders, with an electronic sign detailing the fraud. but nothing really seemed to hit. But now that you have this, this power in numbers, it's a different story. And you just talked about how do you solve this, right? So one of the ways that you have suggested and Ham has suggested is issue a dividend. You've done that. GNS did that. And yesterday or on Thursday, they saw their stock run up. I think they started at like 50 cents or something. They were at 50. They went up to $3 in the aftermarket, and they were at $5, at one point on Friday. So they announced a dividend. They also announced that they had a former FBI director on their board, which probably made Shorts a little nervous.
Yeah, first of all, I have a great deal of respect for Roger. I speak to him regularly.
Roger James Hamilton, right? Yeah.
Yep. And fantastic that he has that kind of an individual on the board. I'm hoping that is something that all of us will benefit from. As far as the dividend goes, which is kind of like one of those very du jour things to talk about, right? So I've announced that we will be spinning out a functioning company which has physical assets that have been appraised at anywhere between 4 to 10 million, and then on top of it, intellectual property and a number of media projects in the works right now. Very interesting company, which I'm not here to sell anybody on. What I am here to say is that first, my plan had always been, meaning this is something that I'd been discussing for years, because I come from an M&A background on Wall Street. The idea for me was always that if I had an opportunity to create an asset internally where 1 + 1 wasn't equaling 3, then I would take that 1 and spin it out so that just the 1 could at least equal, 2 on its own. And the OG collection is
we should say this is an art collection, right? That you're using as a dividend.
It's a media collection. It's the original. It's the original archives and copyright on almost 200,000 images from general media, which included Penthouse Magazine, Omni Magazine, Viva Magazine. Omni was one of the greatest sci-fi magazines that I ever read as a kid. And years and years ago, during the early days of the company, we created this media company based on those assets that we had purchased from creditors from a bankruptcy. And then a lot of it has been rolled into Web 3.0 assets with NFT collections around them and corresponding merchandise offerings around them, as well as IP that's developed out of the stories. We've done a few books. There was a documentary that we did about it. But again, I'm not here to sell the OG. The OG Collection Inc., we call it the OG. What I was here to say is that we had always planned on spinning it off. And so let's use GNS's announcement of their special dividend. I don't know what I don't know what Roger's plan is as far as what that dividend will look like. So I can only speak to my own, or I can speak to historical situations that I've witnessed where when a special dividend is distributed, it can create a short squeeze because the only access to that dividend is for a shareholder of true physical form or a bona fide borrow, in which case the original shareholder who the stock is being borrowed from that transfers that additional dividend over to the new shareholder. And that in and of itself causes the need to cover, even more so in situations where the special dividend is not really a dividend, but the entire company, let's say, uplisting, and therefore a new CUSIP is being distributed and new shares only to shareholders of record. So my theory is kind of a few standard deviations away. Once we realized that we were spinning out the OG collection anyway, and after I've met with Upstream, which is an exchange in the blockchain space that I think bears much continued dialogue about, and is an extremely game-changing opportunity for myself and others to do this. The OG collection will be spun off first onto, if I have my way, onto a blockchain exchange like Upstream as a special dividend. Now,
and this, for retail investors who are just kind of new to the game, right? Who are like, what does this all mean? This is a dividend. It could be a very simple dividend too. The problem is for the shorts, they have to deliver that plus the share that they don't have, and the dividend, which in this collection they can't get that. You're the only one with access to that.
But I think you make a very good point that what that dividend is really does matter. Meaning, because it's a risk reward, right? Like if that dividend is something that people value de minimisly, that won't scare any short seller, and it won't change the way the machines behave. The only thing that changes the way the machines behave is when compliance or the operators come in and say, oh, we have to take this stock out of this behavioral pattern because of the following events. In our case, we have a functioning company with a real valuation in the market and active operations. We were going to initially spin it out to the OTC and then see how it does and potentially uplist it. Recently, again, I can't say that I won't change my mind again, but recently I've gotten to the point where it seems to me more logical to first distribute that that dividend, which is really an ownership stake. Imagine for a moment I had 50 million shares outstanding and we were going to give one full share of the new company to each holder. So now to get that, to sell that, you would have to open up an Upstream account and you would have to list that share. Now, with Upstream, the issue is that at this moment in time, American citizens cannot buy stocks that are on Upstream. They can sell them, and I'm not going to get into the complexities and bureaucracies of regulations here, but at some point in the future, you will be able to buy and sell. And so for us, our notion was, well, why list it on the OTC? Why not first build a broader audience overseas with it and give our shareholders an opportunity to get educated on this dividend process and how it works by opening up Upstream accounts. I opened up my first one quite some time ago, bought a few NFTs. But my point is that in this new era, the dividend thing has to be very real. My plan is then, after we have it on Upstream, that kind of thing takes 45 to 60 days. About 45 to 60 days after that, we would list it on the OTC. See, so my strategy with what I'm trying to do here is both to create long-term value and really inflict a particularly unusual kind of pain on shorts. So when it comes to other companies that are doing the special dividend, again, I know that there's no simple solution, right? Hiring a forensic analysis of your stock, which is one way to find out whether or not your stock has been shorted. And there are great groups out there that can do that, has been naked shorted. There are groups that can study that. But that
You're talking about like Share Intel? Is that?
Sure, Share Intel. There are multiple ways to do that. But again, I'm past the point where I need the proof. I'm at the point where I want to swing my axe. And that's what I'm doing.
Another way you're doing this too, you've talked about a merger with GTII, and Ham has said that GTII has a better setup for a squeeze than GameStop did in January of 2021, that they have more than 300 million naked shorts in there. If you did a merger, you proposed a merger, where are you? What can you tell us about that? And how would that obviously would scare the shorts? Because then you have a new CUSIP, right?
Right. Just to clarify a few things there, GTII offered us $100 million in stock for creating. So I did not offer them The second thing is that, well, I don't know how many shares they have short. I can't tell you. I have not seen or had enough time to look at that research, but I can simply tell you the same way I can about Created, given that I can see the calculations in my head relative to having watched the trading patterns, that the stock has hundreds of millions of shares naked shorted. I mean, it's not, anybody should be able to see that. Again, Kristen, the regulators, the people out there, we could chat about that as well. They know this is real. They're aware. I mean, everybody's aware. Everybody's aware in today's society, whether it's this or whatever the most popular thing trending on Instagram is, whether it's a cat story or someone being exposed for being a fraud, we all know at the same time. We all know, nothing's hidden. So
we all know, but like with Bernie Madoff was huge, right? Billions of dollars, but this seems exponentially more. And yet
we all know here, but we all know here because of technology, social media, collectivity, all that sort of stuff. Bernie Madoff, a dozen years ago, there were a lot of people who knew in their heads, either not knew that they saw it, felt in their bones that something was wrong, just like they did with FTX. And
but you need somebody to listen, right? Because the one guy went repeatedly and told the regulators, and they just ignored him.
That gets back to what I was saying earlier. They're just not staffed enough to actually take care of half of these things. And when they do staff up, they're going after the wrong people. They're going after the small, they should be taking down. Right. So when it gets to GTII and the merger, the acquisition, it's not a merger there, and it's a proposed acquisition. To me, it boils down to a company to succeed in this microcap space needs three things. It needs a strong fundamental company underneath it. It needs strong leadership and what they call a jockey. And then it needs a really correct technical setup, which is what you're talking about when you say a giant short squeeze. And perhaps Ham is right. Perhaps GTII, it may be one of the most insane short squeezes that I've seen, for sure. Now, fundamentally, what it has as a company, it's still working through. There are 2 or 3 very interesting license agreements that their CEO, David, is working on. And I have to wait and see so that I can check my other boxes, what the value, if there is any consummation of those deals, what that will or will not be. And then post that, determine if it's only my business rolled into GTII, what does that do to the combined shareholder base, right? I have to be concerned about my shareholder base first, but at the same time, I'm sure that there's a lot of overlap in shareholders, and I'd like to see whatever could be best done for everyone. But in the end, I have to be able to check boxes, right? As to whether or not these things exist. And then finally, I would have to protect shareholder value. And if there is a final consummation, whatever it is, I'd have to make sure that there were the proper collar mechanisms in the transaction to protect Created shareholders against any downside. I'm only looking to do an acquisition that benefits Created, right?
Right. And you would be the CEO of that, I'm assuming.
And correct. And so checking the box on the leadership part, correct. I would be the new chairman and CEO of the combined entity. Otherwise, that's at least how I would envision it.
Right. You put this news out, right? And Twitter went crazy about the idea, but it sounds like it could be down the road. So does that give those who are naked shorting your stock and GTII just time to continue doing it?
Potentially, but I don't think that our acquisition is the focal point of why those naked shorts are occurring. So I guess the answer to that is no, I don't think that. Most mergers take, a merger it's an acquisition. Again, I keep saying acquisition of their acquisition of us would require, months and months to get through regulators, the whole process. That's not a fast thing by any stretch of the imagination. So I don't.
Do you think something would happen before then, though?
Well, I think the market. Look, I'm someone who believes that the market is telling you what they think is going to happen,
right?
And people should listen to what the market says. Generally speaking, right now, our market cap is a $30 million market cap, and there's a $100 million proposed acquisition. So I can speak for the market by telling you the market seems to think that there's no transaction. I have to go through my process, and if people think or are making those decisions based on looking for news day to day, right. I have to help retail investors understand that's just not how a acquisition works. I mean, just the tax implication analysis of this is months and tens of thousands of dollars of analysis. An acquisition of this nature could cost $500,000 or more in legal fees. So if everybody's looking for me to rush through something, that's just not what I do. I hope that answers the question of what and how I look at GTII at this moment.
Yeah, I think it's important to put realistic expectations, right, of what people can expect. People are becoming more educated, which is great. We talked about the SEC, FINRA. You said there's not enough regulators, but are they even addressing the problem? Do they have the ability to say, settle the trades? Because that's all somebody has to do, right, for these shorts to have to cover. But why doesn't anyone say that?
Well, I mean, I do believe regulators are aware of it. And I actually believe, honestly, from the ones that I have spoken to, from particularly senior people at the exchanges, and again, I speak directly to them. We talked about right. CEOs typically being fearful of calling the examiner. Again, I worked with examiners for 23 years and ran broker-dealers, so I just know that relationship to be different. The examiner is the SEC and the regulators. There's always, like in every business world, like in every organization, there's always a few people in there that, just you wish weren't in the club, right? And that's just the nature of it. But honestly, they're as confounded by a great deal of it themselves. And that's because the answer to your second question is, no, it's not so simple to just settle the trades. It's far, far, far more complex. I mean, if there was a light switch that could say settle the trades, it could bring down the entire financial system.
Yeah, that's what I was going to say. It seems so massive that.
Correct. And it could potentially cause the opposite of a flash crash, as institutions would take massive hits across their books. I mean, massive hits. The same way people lost, $1 trillion of wealth, they could lose $1 trillion the other side. And I don't think it's just the small caps. I think that the shorting behavior, what happens is the algos have learned from the behavior of the micro caps and are now doing it across the board on all the tech stocks, whether it's Tesla,
big companies too, right? Tesla,
Upworks, Uber. I'll name you tons of them. Eventbrite, BuzzFeed. I can just go on and on and on and on, telling you the names where they're subject to the same structure now.
We saw FINRA halt MMTLP in December, and it's been weeks. The investors' money is locked up. They can't trade it. They don't know what's going to happen. Do you think we'll see more of that? And that's going to really make retail investors wary of putting their money in the market. And that's a concern because retail investors are a huge chunk of the liquidity.
Yeah, the problem with MMTLP and that whole situation for me gets back to what I was saying about, retail investors have to understand what is happening to their stocks. That's why I go to such pain to make sure that everything I say, I repeat 10 times, everything that I say to you about the spinoff of the OG collection and what it actually is clear. MMTLP was creating a private company. And so I think that what happened there in the end is that, and again, I don't know how many shareholders are in this type of situation, so I don't know what percentage actually of that giant group really that is. But
Right.
the problem is that it's pretty clear to me, particularly when you watched how the stock behaved in that last day, it's pretty clear to me that there was a real fundamental problem at a few institutions. And I
Right.
saw this and I know this happens because I've seen it in my time on Wall Street. And I would, I swear on the fact that these things happen. You know, no institution can control every position it has. But when it happens, there's a series of phone calls that are made, and it's a problem. And senior people are brought together, and there are operating committees and risk committees and very strong protocols around these things. And then they immediately get in touch with the regulators and start to explain what the issue is. Now, at that moment in time, it moves into the regulator's hands. And simply put, if I was the regulator, I would have done the exact same thing. I probably would have, irrespective of the fact that I understand retail investors' concerns.
Right.
I'm not saying that the institution should never have let it get there. But to think that FINRA nefariously did anything, that's not what happened. FINRA did not target retail investors to try to hurt them. FINRA did what they do in those circumstances when there is an emergency situation. And going from 50 cents to $20 in one day because of an issue like this is an emergency problem. And we probably won't, I think it'll be a long time before we figure out what happened there. But I think that what's happening, and probably will happen relatively soon, is that the institution won't go too long before it creates a proposed solution for the problem for the shareholders. I think the shareholders are going to get whatever is due them. What they will have missed is the opportunity to have sold that stock over a 2-day period because the emergency reared its head. But again, that's the anomaly, right? The things that are happening, GNS and Created and other similar stocks are companies that will continue to function, that have in the public markets, that have CEOs that are educated in this environment and surrounded by smart advisors. And so when we set up special dividends, such as the OG, or whatever it turns out Roger and his group decide it should be, they will do it in a structured way, I am sure, to avoid the pitfalls of the things we've seen in the past that haven't worked.
It's hard enough being a CEO, right? But now you got to worry about these nefarious players who are trying to destroy your company. Who do you turn to as the CEO? Who do you trust to turn to? Because it seems like you're kind of being, you're knocking your head against the wall. You're speaking out, but the help that you're requesting, I guess, doesn't seem to be coming.
That's correct. I would say I'm a very lucky individual that I happen to have a team of operators, from my COO and co-founder to my CFO and others, and my chief information officer and others. They're just so good at what they do that I thankfully am, during this storm, able to devote time to this. I think if you're not a company that has, which gets back to why I said there are kind of three things. It's the jockey, the fundamentals, and the setup. If you're not a company that has a depth of bench, you have a problem in this environment as a CEO. And then as far as who I turn to, I never, when I left Wall Street and started a tech company and took on the role of a CEO in a publicly traded company, right? That's different than a CEO of a privately traded, because the amount of stuff you're regulated by is monumental. Now, at the same time, the benefit is why so many people seek it is that your access to the capital markets is very different as well. So there's risk and there's reward. But what I never would have envisioned beyond the analysis of the risk and the reward is how alone a CEO is.
Yeah.
Particularly in the microcap space. And I say it to my friends and family all the time. Now, again, I'm a blessed individual in that my pedigree and my, at 54 years old, I have had enough tremendous mentors in my life that left me equipped for a situation like this. And so in some ways, I would argue in particular combat, I'm actually better off as alone as one could be, right? Because when you're surviving, even though a lot of people have great advice for you, a lot of people don't understand that you don't have time, and their perception of time is different. And that truly is what distinguishes a CEO from all the other people around him or her in the company or investors, is that the CEO's perception of time is very different. The CEO is always looking into the past, the present, and the future at the same time. And as a CEO who's doing that, I have found that the only people I can relate to are other CEOs. And so when you say the alone thing, it resonates well with me, because when we set up CEO Block and I started to talk with Roger and John and other people that have joined, as well as attorneys and veterans of the industry who have joined because they've felt this way for a long time, I began to see that I'm not so alone. And CEO Block, I guess, is my way of saying, I think I've been fighting alone for a while. I'd like to fight beside an army. And that's really the thought behind it.
Yeah, I think it goes back to that power in numbers, right? Anybody who speaks up and feels alone will feel some comfort in the fact that there is power in numbers. And you got the retail investors who are also rallying around, kind of using your guidance, right, to figure out what next steps are. Two more questions for you. One is the financial media. I listen to it and I sit there and I listen how they sort of deride retail investors, these uneducated gamblers, when in fact, those who are naked shorting, who are part of the financial world, who are, experts, so to speak, are the ones who are gambling with pensions, with 401ks, with people's portfolios. So what would you say to those in the financial media who aren't willing to see the scope of the problem?
I'll use an anecdote. I'm an avid moviegoer. My son and my kids, my daughters, we all go to the movies together. And over the years, when we go out after and discuss a movie, we're like a bunch of movie critics sitting around and we compare it to other movies. And over time, I would speak to my son about, let's say, an article I'd read in the New York Times regarding a movie. And he would say to me, who cares what the New York Times says? He would say, so-and-so, whose YouTube channel explains the CGI effects of the most recent, Marvel movie. That's the most interesting place to get your knowledge of the movie. And in the beginning, I thought, like, most fathers do when their 12-year-old son seems a little smarter than them. I was like, you don't know what you're talking about. The New York Times is the best place to look at it. Now, over time, I've come to realize it's the same thing. Technology basically democratized the news. And it's why there is no matter how long Rupert Murdoch and others hold on to their old ways, their time is over. And it is the end of the old financial media. That is happening. It will go the way of DVDs, 8-tracks. 20 years from now, CNBC will not be what CNBC is today, nor will CNN. Basically what happened was financial news became financial entertainment. And while the retail investor was not sophisticated back in 2007, 8, 9, the retail investor is, as we keep alluding to, and now I'm thinking I have to write a whole article about the sophistication evolution of the retail investor, because, what's happened now is they're like my son. They're like, I don't give a shit what CNBC says. I'm listening to this person who's explaining it like I'm a human being, not like I'm somebody sitting in the arena in Rome and having bread tossed out at me while two guys fight in the middle of the arena over whether a stock is great. I mean, Jim Cramer, for instance, is a joke to me. You know, I know the guy. I met him many times back in the day. He was always around the events and places that we were at, and he was loud and boisterous. And I'll never forget when he mentioned my stock. This was really on the day we rallied, the financial media for a moment picked us up. And without doing a single stitch of research, Kramer called my company a joke. It happened fast. It was within 30 seconds, but it's true. He said, and now I see the stock created is running up, another joke. Never did one stitch of research.
Wow. And retail investors do their research now. I mean, you know, there's some obviously who are not, right? Who are just kind of following along. But I feel like retail investors, particularly since the pandemic, have really become educated. And CEOs like yourself and people like him are teaching them, right? And that's powerful.
The financial media is truly bread and circus. It is truly a machine trying to cater to the lowest denominator. No sophisticated hedge fund or otherwise gets their intel from CNBC. Many a trader I speak to often refers to it as the white noise in the background, right? While they're actually reading a research report from someone on a computer screen, in behind them, they hear the voice. And, you know, right. Perhaps it's like listening to rain when you go to sleep. Maybe you need to hear bells and whistles and people yelling while you're trading.
Speaking of, you know, just what can be done, we see these fines, right? Big fines that are issued sometimes. I think there was like a $900 million fine, but it's the cost of doing business for a lot of these hedge funds and others, right? Brokers. So why don't we see more criminal prosecutions? Is it just because there's not enough regulators, there's not enough people to make those cases?
Well, first of all, you know, there aren't nearly enough cases, right? So even though we all talk about fines and whatnot, they still only come, first of all, they take years to get to that point.
Right.
And we only still hear about 5 or 6 a year if we're lucky, right? So there's not really a lot of them. So from the get-go, the fact that there's a 5.5 million one and a $900 million one, the fact that there's only 2 of 100 that should be brought is kind of silly. So in discussing what it even all means, right?
Right.
What I can say is that having been on the other side of the street, on Wall Street, those things are just line items. They don't even, the way we analyze those things, they don't. It's just a line item. They have 1,000 other things to worry about. They just don't give a shit.
Cost of doing business, right?
It's right. Cost of, but I don't even think it's so de minimis and so rare that I'm not even sure it elevates to them thinking it's like not the cost of doing business. This is what I compare those fines to. It's not a cost of doing business. The cost of doing business should be 100 times those fines. It's more like when they go out to a restaurant and they charge the dinner on their credit card, but they leave which is the business's credit card,
right,
out of their own pocket. They leave an extra 20 for the bartender, and so that came out of their personal pocket. That's what I compare the fines to. No cost of business. It's the tip they leave at the bar, not the cost that they paid for the dinner.
So as a CEO, that's got to be infuriating, I would think. I know you've been on the other side as well, but you know, I've taken so much of your time, and I appreciate it. So before we leave, though, what would you say to your shareholders of CRTD? You know, just looking ahead, you want to give them just where we are now.
I would break it up very simply for them. I know that many of my shareholders are long-term shareholders that would tell me they're long-term shareholders and they trade short-term around their core positions. That is typically the bio of the retail trader. I'm thankful to the ones who, during times like this, lean into sitting on their hands and not taking advantage and feeding into what are moves that are often precipitated by those who then want to sell them. And those who trade actively know this. It is my mission to create long-term shareholder value. And if I've demonstrated anything over the last decade, it's that I won't stop. I won't stop on that mission. And so use that information as a shareholder, look at my past behavior, and predict my future behavior.
Message to the shorts?
Particularly to them.
Okay. I appreciate your time. Be well, Jeremy.
Thank you.
Good luck in your fight.
Thank you, Kristen. Speak to you